Hello guys, let's look at trading profit and loss account and statement of financial position. I want us to look at trading profit and loss account and statement of financial position. This is the illustration. We are told from the following trial balance of G Steel, draw a trading profit and loss account and a statement of financial position. Let's go straight away to the question. But for tips on how to become a pro in doing this, watch this video. So we start with the name of the business. The name of the business is G Steel. Then we have trading. Profit and loss account. For the year ended September 30th. I want to say this, that in the current world, this statement, this trading profit and loss account is called income statement. In the current world, as per the international standards or international financial reporting standards, now we are using the name income statement or statement of comprehensive income. But for purpose of understanding the genesis of income statement, then we can learn the trading profit and loss account. This is the information given. We have stock, carrying outwards, carrying inwards, return inwards, return outwards, all that. And then we have sale, we have purchases, sales, all that. So let's start. We know the format of this. But before then, let's look at, let me also draw this G Steel, the statement of financial position. This was previously called balance sheet. So let's do this. Let's look at this. We start with sales. The figure for sales, as I said in the previous video, just a recap, in the previous illustration, that every transaction in this trial balance is posted once, while every transaction in the additional information is posted both in this and also this. Every transaction in the trial balance is posted once, here or here. I'll be ticking to confirm that. So sales, from these purchases and sales, we know incomes appear on the credit side of the trial balance. I can show this is the debit and I can show this is the credit. So this will tell me it's my income because they appear on the credit side of the trial balance. So I have income is 380, 400. After we sold these goods of 380, 400, some goods were returned inwards. These goods were returned to us. The figure opposite is the return. I sold this was what was returned. So 1540. So I write here, I minus what was returned, 1540. I'm minusing return, less return inwards, in order to know what I actually sold, which is what we call net sales. Which is what we call net sales. Which is what I call net sales. I pick a calculator. So when I minus that, I get, I'm minusing return, less return inwards, in order to know what I actually sold, which is what we call net sales. Which is what we call net sales. Which is what I call net sales. I pick a calculator. So when I minus that, I get, just a minute, we do with a calculator, 380, 400 minus 1540. I get 378,860. That's my actual sales or the net sales. So from here, I less cost of goods sold. Cost of goods sold. Cost of goods sold is called COGS. So I want to calculate the cost of goods sold. The cost of goods sold, I start with opening stock. Opening stock. Opening stock is given here. Opening stock is 41. Opening stock 41,600. When you have opening stock, we plus purchases. We plus purchases. Purchases is those goods that we purchase, and they're usually written on the debit side. 188,430. Purchases are on the debit side because we are receiving stock, which is an asset we are debiting. Purchases are the debit side of the trial balance. So after purchases, there is something that we add the cost we carried these purchases, plus what we call carriage inwards. We add what we call carriage inwards. We add carriage inwards. Carriage inwards, 3,700. I add this. Then I minus what goods might have been taken away from us. After I purchased, there are some goods that I returned, which is returned outward. They were returned out from our warehouse. Return outward. Return outward. Here, after this purchase, what is returned is on the opposite side, or entry 3410. 3410. 34,010. After I made purchases and I returned this, I know the goods that are available for sale. But there are some closing stock that remained. So that I see how much I actually sold. Less closing stock. Closing stock is 44,780. Then I can know what is the cost of the goods that I sold. Let's work it out. So I'll work it out, 41,600 plus 188,430 plus 3,700 plus minus 3410 minus 44,780. What I get is 185,540. I can post this cost of goods straight opposite. To save space, I can post it there. Then I put on bracket. So this minus the cost of goods, what I get is the gross profit. 378,860 minus that. I get the gross profit of 193,320. 193,320 is my gross profit. 193,320 is my gross profit. What after I get the gross profit, I look at, do we have any other income? Do we have any other income? On the credit side, this is a creditor. This is capital. No other income. Incomes on the credit side. Probably here we could have discounts received, commission received, rent income. But since we don't have, we go straight to less expenses. So we start with less expenses. I can write this in capital. Less expenses. So let's look at the expenses we have. Expenses are normally on the debit side of the trial balance. Expenses are on the debit side of the trial balance. Expenses are on the debit side of the trial balance. Expenses are on the debit side of the trial balance. So I have this carriage outward is the first expense. Carriage outward. I tick that one. 2,100. I have, I think this one we have posted. Salaries and wages, 61. $61,400. Warehouse rent, $3,700. Insurance, 1356. Motor expenses, motor expenses, 1910. So we have posted that. Office expenses, office expenses, 412. We have lighting and heating, lighting and heating expenses, 894. General expenses, 245. Yeah, we don't have any other expense. So now I get the total of all expenses. I want to add my total expenses here. So I can start with 2,100 plus 61,400 plus 3,700 plus 1,350 plus 1,910 plus 412 plus 894 plus 245. My total expenses can add 2,100 plus 61,400 plus 3,700 plus 1,356 plus 1,910 plus 412 plus 894 plus 245. My total expenses here is 72,017. So I can choose to write it here, 72,017. Then I put in brackets this minus this. I have 193,320 minus 72,017. What I get is 121,303. This is what I call net profit. That is net profit. So we are done with the trading profit and loss account. And I want to say something, that this bit is what was called trading. Up to this bit, this was the trading account. Then here you have now the profit and and loss account. Why was it called trading? Because here we only record activities that deal with two things: buying and selling of goods. Activities that deal with stock. Under this trading profit, what we call the trading profit, I can even baptize it to trading profit. It is the profit from the actual buying and selling without factoring other expenses. Expenses like salaries, expenses like electricity bills, expenses like postage, expenses like office, motor vehicle. So the very act of trading, that is when you buy and when you sell, is what you get the trading profit. If at this instance you get a loss, then there is a big alarm in a business. That is a red alarm in a business. Here, even if the loss is there and there is we have something, it tells you at least you need to cut on the expenses. But otherwise you are selling goods fairly above how you purchased them. If here you get a loss, it tells you are buying at probably 100 and selling at 90, which does not make sense. Which cannot make sense in business. You can buy at 100, sell at 110, even though you may not be able to pay your expenses, but you have made some contribution to your fixed expenses or to other expenses. You can't make a loss here in a business unless you are not thinking. Right. Let's go to the statement of financial position. Let's go to the statement of financial position here. So we know from the previous example, we start with the non-current asset. Non-current assets we have here. The premise. Premise 92,000. We post on this column. We also have motor vehicle 13,400. We also have furniture and fittings 1,900. Fixtures and fittings. Remember, the trick in this question is to avoid mixing incomes with expenses or assets. Here, you know these are expenses. Once you know the categories of expenses, you are an A student. Once you know the categories of non-current assets, current assets clearly, when you know those categories, you are an A student. So we have fixtures there. I think I've posted this. Then we are done with the current assets. Can pick a calculator here. We see what's the total for current assets. Let's see, 92,000 plus 13,400 plus 1,900. So the total is 107,300. The total for this is 107,300. From there, I can skip the line there. Then you write current assets. Current assets. Under current assets, we have the debtors, or we can start with this one. This one we had already posted once, so we post twice. We can start with stock, which is 44,780. We can now go to debtors, which are usually on the debit side. Debtors are on the debit side of the trial balance, 42,560. Debtors, 42,560. Then we have cash at bank. Cash at bank, also the debit side, 5106. We check whether we have any current assets. I think we are okay. So let me get the total of that. We have said 44,780 plus 42,560 plus 51,06. The total is 92,446. The total here is 92,446. I can use what we call the net worth format. And if it is the net worth format, then I just say less current liabilities. Less current liabilities. Current liabilities are usually on the credit side. It's this one, 31,600, which is creditors. 31,600. What we get here is what we call working capital, which is current assets minus current liability. In other words, how much money do you have after paying your liabilities? We had some cash. Stock is also like money. It's called cash equivalent. Debtors is a cash equivalent. If you are to pay your creditors, how much money would you remain with? How much money would you remain with? That's what we call the working capital. How much money would you remain with for working or for engaging your business? So if I take that amount, this 92,446 minus 31,600, what I get here is working capital of 68,46. This working capital I take here, 68,46, because this is money that we are using to work. This plus this 107,300 plus 68,46, you get a net worth of 168,146. So this is what we call net worth in this net worth format. So from the net worth, you get total current assets plus working capital. Total current assets plus working capital. Now, in this business, what we do is to get a section of what we call financed by. Financed by, we start with capital. A business is normally financed by capital. We start with capital. Capital is 68,843. We post on this column 68,843. Then we plus the net profit. Net profit, we have it. This one we extract from income statement 121,303. Then we minus drawings. Drawings are here in the income statement. 22,000. We minus 22,000. So let's get that calculations. We have 68,843 plus 121,303. 121,303 here. Then minus 22,000. The 121,303 is the net profit. This is what you take here. That's what you take there. So what you get is 168,146 net worth. What you get is 168,146. Friends and colleagues, this answer, this net worth and this should be the same. I want to repeat, the catch, the trick in this question is that every information in the trial balance is posted once, either here or here. Every information in in the additional information is posted twice. Both here, both here. You need, for you to be an A student in this question, you need to understand that every additional information, the trial balance is posted once. Every information, the trial balance is posted once, either here or here. And every information in the additional information is posted twice, both in income statement and in the statement of financial position. You also need to understand one more thing. For you to be an A student in this question, you need to know the categories clearly. The categories of incomes, the categories of expenses without mixing them. That you don't write an asset here. You need to know the categories of non-current assets. You need to know the categories of current assets, the categories of current liabilities, and this category. Once you know the categories that you don't mix those categories, getting the format becomes very easy. Be blessed. Thank you.